Hello, in this presentation we will write checks for expenses within the software of QuickBooks Pro 2018. If you've been working along with us, we will be continuing with the Get Great Guitars problem. If not, that's okay. We will also be demonstrating at the same point this write checks icons. We will be writing checks for expenses using this write check icon to write the checks. If you have access to the backup, then you could restore that backup by going to the file and restore company file. That will take you to the specific point if you have access to get to that specific point, thereby not having a problem of having an error possibly in the past, not having the same amount of data, not being on the same page. We'll make it as easy as possible if we are all on the same page. However, if you don't have that, that's okay too. We will be covering the write checks and you can see what's going on with that. As we do enter more data, these types of problems here will be entering data. It is nice to be at the same point. We would like to be at the same point, both at the beginning and at the end of the problem, basically to see if we're getting everything in there in the same format, in the same way. We have the Home tab open here. If you don't have the Home tab open, you can go to the Company and Home tab to open that up. I'm also going to open up the open windows, which are not open when I first opened the program. I'm going to go to View and select the open windows and therefore show what is open. The only thing at this time being the Home tab. So we're going to write some checks, and we're going to write checks in this time just paying, in essence, the monthly bills. We're going to be paying normal types of bills, normal types of transactions. It can be useful, and we will see at a later time how to enter the bills here. First, putting it into accounts payable and the related bill, the related expense typically, and then pay the bills all at the same time. That's one format of doing this. This format is also good in that you can put the bills in and then pick and choose which ones you want to pay, thereby having the ones that you don't pay still in the queue, still being recorded as an expense at the point that you put the bill in there. We here, however, are going to skip that first step, and we'll practice that later and just go directly to the writing checks. So we're going to use the write check icon over here in order to write these. Now note, you could also use the check register just as a third option, that being in the banking section and then going down to register here, entering this information directly into the register. Why would you use one or the other options? This option on the bills gives you a bit more flexibility to pick and choose which checks you want. And you can also have a printing option when you print all the checks at the same point in time. In a couple different ways, you can print all the checks at the same point in time. Now, if you were to buy checks and print them through QuickBooks, then you're going to have pre-formatted checks and you want to be able to print those all at one time. So you're going to have to put those checks in the printer, make sure they're facing the correct direction, and then print all the checks at the same point in time. We're not going to be actually printing the checks here. And if that were the case, if you were a small business or you needed to enter the checks into the system in order to then reconcile, in order to have the data within the system, although the checks had been written outside of the system, then sometimes the fastest way to do that would be the check register. We here are going to practice using this icon, just the write checks. We're just going to write checks, and we're not going to be actually printing the checks here. We're just going to be we're going to be entering the data here. The print checks item would be the same way, except then we would go through the process, of course, of printing the checks, which does mean that you would need to buy the external checks and then put them into the printer in the proper way in order to print those checks out. First check we're going to write is for insurance policy, so we're going to click on the write checks here, and then we're going to go through this. We got a familiar looking check, pretty self-explanatory type looking check. The check number will populate on its own. If we were to be printing checks, that check number then should match the check number that is already on the printed check. That's one of our major internal controls over the checks if we were to be printing these out from QuickBooks. Then we're going to put the date, which is going to be 01/28/21. We will be working this entire problem. That's January 28th, 2021 in 2021. The payee, we're going to have Safe Insurance Company. Now note, I'm typing that name in. This is the first time that we have paid them. This is a relatively new company. Instead of having typed in new here, I'm just going to type in the name often being faster, and then select tab, and it's going to say, do you want to add that? And we're going to say yes. Now, most of the vendors, all we typically need is basically the name in order to write the check. But if we want to have a full setup, we would go to the full setup, entering their address and their phone number and whatnot here. In order to write the check, we're going to do a quick add, adding the information quickly. And we're going to select the vendor. That's who we're going to be paying, or what we are being paying, as opposed to a customer, employee, or other. And there we have that. The amount is going to be $11,000 that we're paying. Tab. And this will populate on its own. We could put the memo here. I'm not going to put a memo at this time. And note that we have the expense tab versus the item tab. The expense tab will typically be the default tab. The item tab, remember, normally that means we're purchasing inventory. So when we're on the items tab, we typically have some different areas here related to typically inventory. We're going to go back to the expense tab. What is confusing a bit on the expense tab is that the expense tab includes both expenses, and it's basically everything other than inventory is going to be here on the expense tab. So in this case, for example, we bought insurance, and insurance really should be in a prepaid insurance, and then we should have an adjusting entry at the end of the time period, that in accordance with our matching principle. For example, if we wrote this entire $11,000 off this month, and then we had no insurance next month, that $11,000 would make our net income look really low this month in comparison to next month. And so what we really should do on an accrual basis is put it on the books as an asset, and then divide it out over the number of months that it is covering, assuming this is covering more than 1 month, and then divide it and then expense it evenly so that our net income reflects the use of the insurance, not the fact that we prepaid for example, a year of insurance in the first time period. The point of that is that we're not going to be recording an expense here. We're actually going to be recording an asset account called prepaid insurance, even though we're using this expense tab. So note that this expense tab is not really properly named. It's basically everything other than an item tab, the items typically being inventory items. So we're going to have prepaid expense. So we're going to say prepaid insurance. And we don't have prepaid insurance yet. That's why I'm going to type the entire thing in here. If we were to look through here, we don't have prepaid insurance. We possibly have insurance expense. And if you were to choose that, that wouldn't be total. That would be okay, but it would probably be the fact that we would be expensing multiple months of insurance in the month of payment, and it would be more proper to set up the prepayment. So we're going to set up the prepayment, and then we're going to do the adjusting entry at the end of the month here. So I'm just going to type in the account that I want, which is going to be prepaid insurance. Instead of selecting add new and then say tab, it's going to say, do you want to set that up? We don't see that account. We're going to say, yes, please set that up. And as we set it up, then we are not going to have an expense. That's the default. That's what QuickBooks is always going to default to, because most of the time it'll be correct that it will be an expense. But in this case, we're writing a check decreasing cash, and the other side of it is actually going to be an other current asset account. So we're going to choose other current asset account and then say continue. And there's our account. It's under other current asset. It's a prepaid insurance account. We don't need a description. It's not going to be a subcategory, and we're not going to be dealing with the tax line at this point. No opening balance. We're never going to be dealing with that opening balance line again since the point in time that we started the company. So we're going to say save and close, and there is that. So what is this journal entry going to do? What is this check going to do? We know one thing, it's a check, and that means it's going to reduce the balance in the checking account. The form itself means that, and that's the case with most forms. We know that this being a check means it's going to be decreasing the checking account. The checking account here on this drop down, we only have one, that being the one then that it will be affecting. Then the other side is the one that we're going to choose down here in the expense side. Prepaid insurance, an asset in this case, going up. So let's record this. We're going to say save and close, and then take a look at what is happening in terms of the financial statements. Let's take a look at our main two financial statements. Those, the balance sheet and the income statement. We're going to go to reports up top. We're going to go to company and financial. And we're going down to the balance sheet standard. I'm going to customize the report in order to get a date range so that when we drill down on the information, we will have a range when we're looking at the transaction detail or the general ledger. So we are going to make the dates 01/01/21, working in January 1st, 2021 to 12/31/21. We're going to choose the whole year of 2021, the year that we will be working in. And then we'll select OK. There is our information. First, the checking account. We believe the checking account should be going down by the check that we have now written. Double-clicking on the checking account. Scrolling down, there's that 11,000 right there, decreasing the checking account balance. If we double-click on that, there is our check. Closing that out, the other side of it, note we put into prepaid insurance. So if we scroll, that's also an asset. Where am I going here? We're going to stay up here. There's prepaid insurance right there. It's an asset. There's the 11. Double-clicking on that. There's the activity, the check in our transaction by account. And we're going to double-click on that. And there is our check. Closing this back out. You may be asking, why is that here and not on the income statement? And part of it, at least, should be on the income statement. And that's what we'll do at the end of the month. We'll do the adjusting journal entries to expense part of that prepaid insurance that has been consumed, the month's worth of it that has been consumed for that month. Next check we're going to go back to the Home tab. We're going to enter another check. This is going to be for supplies. So we're going to go back to Write Checks. I'm going to click on Write Checks. It's going to be at our checking account again. We're going to say that the number is the same again. Well, the number's pre-numbered, so QuickBooks should have that. If we're writing the checks, it should match our checkbook and or the checks we're going to have to print within QuickBooks. The date is going to remain at January 28th. And we're going to get this from Staples. We're going to say another new vendor. So rather than going up here and typing add new, we're just going to type in Staples, the new vendor that we would like. We're going to select tab, and it's going to say, do you want to quick add that? And we're going to say, or do you want to add that? We could use the quick add. We could use the setup. The setup then allowing us to enter the address and the phone number and a lot of other information. The quick add giving us the name, all we need typically to write an actual check. We're going to do the quick add at this time. The vendor is appropriate. It's always going to guess vendor when we are writing a check because it's typically a vendor we are looking for as opposed to a customer or other or employee. And therefore, we're going to say OK on the default. We're going to say we spent $500 of this check will be for $500. Staples, I'm not going to write a memo. And the expenses, once again, it's on the expense tab. And we're buying, in this case, office supplies. So we're buying supplies. I'm going to imagine we're buying like computer ink. And once again, supplies is another one of those areas where we may just expense it if 500 is a relatively small amount in comparison to our revenue, meaning if capitalizing it and tracking the supplies is immaterial in relation to our income, we might just want to write it off. But oftentimes book problems will put the supplies on the books, and oftentimes in real life when the supplies is significant, we will want to track it in a similar way that we track inventory. So therefore, typically we put the supplies first on the books as an asset, and then we would expense it over time. That being said, however, if the supplies is a small amount in comparison to the net income, it will just be expensed in that case. In this case, right here, we're going to put the supplies to the expense account, not doing the adjusting entry of adjusting the supplies account, writing the supplies in case directly to the expense at the point of purchase. Just be mindful if you're working in an area where the supplies are significant or a book problem, you will typically be capitalizing the supplies, putting it on as an asset of supplies, then adjusting those supplies at the end of the month. So we're going to put supplies expense Actually, we have a supplies expense. Office supplies. So the book is calling, the office supplies is going to be the account we will be going to here. Now note that I was putting in supplies expense, and that would be the account name that I would have chose if I was to choose them on my own. The office supplies is what was already in the system, given the fact that we had a chart of accounts prepared by QuickBooks. So it's just a slight variation in the name. However, it's useful to go through there if you have something that's going to be an expense such as this, and take a look and see if there's going to already be an expense that has been generated similar to what you would be using through QuickBooks when we generated the software, when we first installed the software by choosing the type of industry, this type of industry being a manufacturing, or not a manufacturing, a merchandising company. Now we do know that it's an expense and not an asset by the fact that it shows us an expense over here. So we are talking about office supplies an expense, not office supplies an asset. So we'll select tab. There's the 500. What will be the effect of this check on the financial statements? 1, the checking account will go down by 500, the amount we paid. 2, the expense will go up by 500, bringing net income calculated as revenue minus expenses down. Let's see if that's the case. We're going to say save and close. We're going to go back to our balance sheet. Once we do, it will refresh automatically. So we are in the Open Windows tab, opening up the balance sheet. We can take a look at the checking account here. Checking account, double clicking. Scrolling down to the 500, we see our item. Double clicking on that 500, we see the check that has been written. The other side will be on the income statement, so we'll close out this, close out that. Go back to reports, looking for the income statement, which QuickBooks calls the profit and loss. We will go to the company financial. Scrolling down to the profit and loss, actually it's the first one, so we don't scroll down, we're going to go to the first one, profit and loss standard. We are going to change the date range to the current range we are working in, 0101 212 12/31/21. And we should have then office supplies. First amount that has been input into office supplies yet, that is that 500 right there. If we zoom in on that, we see the office supplies here. Zooming in on that, we see the actual check that has been input. If we close this back out, we see that net income then decreasing by the office supplies from gross profit down by the 500 to the 225.40. Next check, we're going to go back to the home and see what we have next. We're going to pay the utility bill to Edison. So we're going to write another check and see what happens there. Writing check. We're going to go to tabbing over. The check number will be populating on its own. Hopefully it will match what we have on the checkbook. We have the date is going to be the same. We're going to write it to Edison. Now once again, we don't have Edison in there yet for our power expense, our power bill. And that's because it's the first month. Note that all of these are the first month. So if we were to do this, when we do this next month, then all these customers will already be in there, as will the accounts populate depending on the preferences that we have. So when we do this the first month of operations, of course, it's a bit more detailed, a bit more challenging. We want to put more time into it to make sure that we lay the foundations for doing everything the way we want to go forward with, because after this, much of this will just populate on its own, and it'll be a lot easier when that is the case. Just hopefully it'll be set up properly. So you may want to get help then to set the first month up to make sure that the accounts are all proper, and then from there forward things become much easier. So we're going to type in the name. It's a new vendor, so we're going to say tab. It's going to say, do you want to set up the new vendor? We're going to say yes. We're not going to do the full setup. Once again, we just need to do the quick setup at this point to include the name in order to write the check. So we're going to go a quick add. Vendor is the default, which is a correct default. So we're going to say OK. The amount we're going to say is 620. And we have this 620 there. Then we have the address, no memo, and expenses are going to be, we're going to call these the utility expenses. So if we type in utilities, it has one there. We had not made that account. That account was generated from QuickBooks when QuickBooks was set up. when we selected the type of industry, this type of industry being a merchandising type of industry. We have the utility set up. We know it's an expense type account here. Looks correct. Therefore, that's what we will use. 620 is the amount. So we're going to go ahead and say save and close after we think about what this is going to do. This is going to decrease the checking account by 620, and it's going to record an expense, utilities expense, increasing 620, bringing down net income by that 620. So now we're going to say save and close and see if that is indeed the case. So we will go over to the balance sheet, which is going to refresh when we select it. There's the balance sheet, cash account, checking account up top. Double clicking on that, we see the decrease here of 620, it going from 114,585.50 down by 620 to 113,965.50. If we double click on that amount, we see the check that has been generated or that we just made right there. So we're going to close this back out. We're going to close this back out. Then we can go to the profit and loss and see if it does what we believe it should on the profit and loss, that being an increase in the expense, utilities expense. There's the 620. There's the 620. There's the check. Closing this back out, Xing out, Xing out. There's our two checks, and now we're currently at a loss here because we had gross profit of 725 minus those two expenses, bringing us to a loss of 394.60. And so that's going to be the second check. We are now going to write the third check. We're going to go to the Home tab, back to Write Checks. So we're going to be over here, Write Checks. And this check, we're going to be writing the phone bill. So it's going to be from the checking account. We're going to have the check number populate automatically. Date is going to be January 28th. That is correct. We're going to write this one to Verizon. Once again, this is the first Verizon. This is the first time that we have written a check to Verizon. So we're going to have to enter that information here and then add Verizon as the vendor, as we will do and as we have done in past transactions. Once we do this again, remember Verizon will self-populate. It'll already be there when we start typing it in after the first month of operation. Once we select tab, it's going to say, do you want to set this up? Once again, we're going to do a quick setup. Say yes, we would. Vendor is the correct default, so we will keep the vendor as the default. The amount is going to be 360. We're going to tab through this. No memo. We're going to type the account. The telephone expense is also an account that will be generated typically almost any type of business that we make within QuickBooks. So if we choose an industry, just about any industry will include the expense account telephone, so you shouldn't have to generate that expense account. We can see here once again that it is an expense account, so we're going to tab through that. Looks like what we need. What will this do? Bring down the checking account, 360. Increase the expense account, 360, bringing down net income by 360. Save and close. Let's see if that's the case. Back to the balance sheet over here. It's going to refresh automatically if we double click on the checking account. We see that 360 here for the Verizon. If we double click on that, there is our check. Closing this back out. Closing this back out. We're going to go back to the profit and loss, and see the other side of this transaction, that being the telephone expense here. If we double click on that, we see the checking account. Double clicking on that, we see the check for the telephone expense. Closing this back out, closing this back out. There's the effect, bringing net income down. We now at a loss of $754.60. If we go back to the Home tab, that's going to be that, and those are going to be the checks we have written with the write checks. Note once again that there's a couple different ways we could go through that, and we'll take a look at some of them in the future. In the past, we looked about how to enter this same data directly into the check register, banking, use register, enter that data directly into the check register. And two, we'll see how to do that first by entering a bill, and then by paying the check, paying those bills, of course, with a check. At a later point, we'll take a look at that option.